How's it going, traders and aspiring traders? Welcome back to my YouTube channel. It's your boy here, the Forex Amateur, and today we're going to do another educational video. So in keeping with the topic that we've had going for the past week, 2 weeks, right? I know I'm spending a bit more time on this topic, and the reason for that is because I place that much importance on it, right? For me personally, once I began to understand market structure, it made it much easier for me to understand price action and essentially translate or convey into my own subconscious what price is most likely to do next, right? Because I find that market structure creates a certain level of precision when it comes to setting your entries and taking your targets, right? Or setting your targets. Because one of the biggest issues that people have is essentially when to enter and when to take profit. So when you understand market structure, you most likely understand the range, and that is the operative word in this situation. You understand the range that you are operating in, right? Firstly, you understand you're in a bullish or bearish market situation. Once you understand that, you are able to then define a range that you are operating in. So let's get straight into it and let's have a look at this, right? So let's say, for instance, you're in a bearish market, right? That's the ideal bearish market, right? So how do we know that this market is bearish? Simple. We've got a high, we've got a low, we've got a lower high, we've got a lower low, right? Breaking a previous low. That's important at that point. That's number one. And then we've got, this would be number one, making a lower high, making a lower low. And then this would be number two, which is breaking a previous high. And then at this point, this would be number three, which is respecting a previous high, right? After breaking market structure. So in this instance, we know that, hey, we're in a bearish market situation. If you're looking to take an entry in here, this would be completely fine if you're trading regarding market structure specifically, right? Because this market structure in this instance is bearish, is absolutely bearish. Or alternatively, you could wait for another break of market structure because remember, like I said on one of the previous videos, I'm not sure if it was market structure lesson 1 or 2, one of the previous videos, where I spoke about if price breaks a low, that is a sign that the market is bearish. But if it pulls back and breaks a low again, this is showing you a clean example or a clean indication that momentum has now switched to the downside, or momentum is continuing to the downside, depending on whether you're trading a reversal on a market or you're trading a continuation of a bearish trend. So in this instance here, we can see, okay, price broke market structure to the downside, formed a lower high, lower low, came back and formed another lower high and broke market structure again. So this, at this point in here, this is now telling you that, hey, momentum has switched or is continuing to the downside. So in this instance here, what are you looking for? You need to understand what your range is, right? Whether you're going to take the first entry off of this point or whether you're going to take the second entry based on the pullback into there and take it to the downside, whatever it is that you decide to do. For me, in this instance, or for the continuation of these lessons, I'm simply going to focus on taking this secondary entry inside of this range in here to the downside, as that is a clean confirmation entry, right? A first entry of this point would be a higher risk entry because you're taking it based just off a single market structure break. Okay, so looking at this, we've got market structure break, we've got another market structure break in here. What are we now going to do is we're now going to define our range, right? We do know that when price breaks a previous low in a bearish market situation, what we can look at as an area of interest or as a range where we would expect price to respect or a resistance, whatever it is that you want to call it, is we would focus in on the low that was broken and on the high that was formed, or the high that formed the momentum that broke that low, right? Or the high that was formed, which basically sponsored the breaking of that previous low, whatever wording you want to use. I'm not really sure what you want to use. But in this instance here, as you can see, we've got breaking market structure, push to the downside, forming a lower low and a lower high, right? And then this was the high that was formed that push that broke below this previous structure point, right? So we know that, okay, from between this low and this high is our area of resistance, right? So if the market does pull back, it should not pull back and break this level. It should pull back into this level, give you some sort of maybe a head and shoulders inside of that area, and then it should push the downside. Or it should pull back, give you a double top in this area, and then push to the downside, or whatever it is that you're going to use as confirmation based on your back testing, right? So this is essentially now our range that we are looking to trade, right? Once price starts to pull back from this area in here, right? Once price starts to pull back from this area in here, now we have the 3 points that we can use in order to take a trade. Why do I say 3 points? Because we now have our target, right? That would be our target. Because what we do know that if in a bearish situation, in a bearish market, price breaks previous lows, right? So it would make sense if you're taking a trade inside of this area in here, whatever, wherever it is that you're going to take a trade here. If you take a trade inside of that area, it would make sense for you to target this previous low. Why? Because in a bearish scenario, price is most likely to come back to this low. Maybe even break it and continue to the downside, but most likely to come back to this low, right? So that essentially gives you your range when it comes to taking a trade. So what would you now look for in this situation? You would simply now look for, as price pulls back into this area here, right? Let me actually use something else for that. Let's remove this firstly, and let's remove that firstly, and let's draw this part on with a different color. So as price begins to pull back into this area here, right? In most instances, what do you want to see? You want to see some sort of a corrective move to the upside, right? You want to see a clear corrective move to the upside. It can be impulsive, right? But those are mostly higher risk trades now when it is impulsive back to the upside, because you want to see a one-sided impulse. You don't want to see a double-sided impulse, because a double-sided impulse is most likely going to lead to another correction, right? And you want to be trading in the highest probability in the direction of momentum, right? Because as you can see in this instance here, like I said, when a low is broken, sorry, let me grab the pen. When a low is broken, followed by another low being broken, momentum is strong to the downside, right? Cool. So as price begins to pull back, you now know your range, right? What is your range? Price should not break above this high in here, right? Because only a bullish market breaks previous highs, right? Makes sense? Wow, what was that? Why is that happening? Only a bullish market breaks previous highs. Price should, however, break below this previous low or come back to this previous low, because a bearish market breaks previous lows, right? So as price begins to draw back into this area here, you know that somewhere inside of this area inside here is where you're going to find your entry to take this market to the downside. I hope that makes sense, right? Very simply, you're looking to define your range. All of the information that you've gotten to take a trade from this area, wherever it is that you are going to take the trade, right? Whether you're going to take an entry right off this level in here, right? Maybe put a pending order in there, something like that. If you're a bit more of an aggressive trader, you could always look at something like that. Whether you're going to wait for some sort of a confirmation inside of this area here and put a stop loss above it, that's completely fine. Or whether you're going to wait for price to come into that area, react and give you some sort of a strong confirmation, which means that you would most likely enter somewhere below here, get a much smaller stop loss, perhaps somewhere inside of there, and you're still looking to target here or target lower or whatever it is. This would obviously give you a much better, if you're looking at it from here, this entry inside of the range and this entry with extra confirmation gives you a much better risk reward as opposed to this aggressive entry over here, right? Very simple, very, very straightforward. Now let's clear some of this off. And that should do it. So now that is your bearish market scenario. Let's look at it from a bullish perspective now. So let's say we've got, okay, price reacts here. Forgot to turn that back on. Let's get that pin again. Price reacts from there. Let's say it comes back down to here, comes up, does whatever it wants to, and then breaks the high. Let's use this. This is a bit more of a complex scenario, right? So let's look at it again. So in this instance here, price broke this low after form and then formed this lower high and then came back and broke this low again. So in this instance here, if you're still taking sells, right, based off the fact that we are in a bearish market, momentum is still to the downside, taking a sell at this point, as long as it does agree with your rules, as long as it's a rule-based entry, if you take a sell at that point, that is completely valid, right? Taking a sell at that point and targeting down in here. That is completely valid, as I said on one of the previous videos. However, if you're looking for additional confirmations, there should not be much confirmation to take a sell at this point because it won't make sense. But who knows? In this instance, you might take a loss at that point. All well and good, let's move on. So price then pushes up and it breaks above this previous high, right? So after breaking a high, it forms a higher high, forms a higher low, right? In this instance here, I drew this like this on purpose because this is a much more complex scenario. Now, what do we see in this instance here? We see number one being satisfied in this area here, right? Formed a higher high plus a higher low, right? Higher high and higher low was formed. Number two being satisfied in this area here. Why? Because we had a break above a previous high, right? So that's number one and number two being satisfied in this area. What do we notice about this as well? Number three, in this area here, it respected this previous low. Now, as I said in the previous scenario, based off of this high here, that is a much more aggressive entry here, especially if you're trading a reversal. If you're trading a reversal, you do not want to be taking the first higher low that is formed on the back of a bearish trend, and you do not want to take the first lower high that is formed on the back of a bullish trend, right? So you don't want to take the first higher low that's formed on the back of a bearish trend, and you do not want to take the first lower high that's formed on the back of a bullish trend. The reason for that is because it's much higher risk. You now are putting all of your eggs in the direction that it's most likely gonna change trend, right? However, once you get an additional confirmation where price forms that higher low and then pushes up and breaks structure again after breaking structure here, you're now much more confident in the fact that, hey, this market momentum has now switched to the upside. Or once price comes back and breaks structure again after breaking this low, it breaks a low again with this second lower high, right? And this second, at this point, the second higher low, right, would be essentially, that is telling you that, hey, sorry, in this instance here, it's not the second higher low, my mistake. But we do have a break of structure, and then if it broke structure again, that would be the second higher low. But anyway, this instance here and this instance here is where you essentially want to be, right? Because that is your confirmation telling you that, hey, market structure has switched, as well as momentum has moved over to the bullish side, or momentum has moved over to the bearish side. So looking in this instance here, we do have a break of a previous high, right? We do have a higher high, we do have a higher low, we do have price respecting a previous low, but we have to consider the fact that we're coming off a bearish trend, and this is the first higher low and the first higher high that has been formed on the back of all of this momentum to the downside. So we need to see a clear indication that, hey, momentum has now switched to the upside. Right? Does that? I hope that makes sense. I don't know why I was about to ask a question as if you could answer me, but but anyway. So looking in this instance here, this would not be a situation that you would want to trade. But if you're a much more aggressive trader, you could always get in on a trade. And remember, you're always targeting this previous high. And then based on whatever management system you have, perhaps you might be able to get your stop loss to break even before price then pulling back here and coming back and taking you out. If not, and you get stopped out, that is also okay, right? But it's important to understand that you getting more confirmations or stacking up your confirmations is much more assuring when it comes to taking a trade, and it's much safer in terms of whether or not you're going to lose or win that trade. So in this scenario here, we can see price failed to then break market structure again, came back and it broke this previous low. But one thing I want you to focus on in this instance here is I want you to notice the fact that this was the low that created that high, right? So this was a lower low, that was a higher high. So essentially in this scenario, this is the range, right? If price breaks above here, it is bullish. If price breaks below here, it's most likely bearish. So in this scenario here, I would not be interested in trading inside of here because we've got a break of bearish market structure and we were in a bearish trend. If anything, I have no confirmation that we're now going to go into a bullish trend. So now I'm going to wait for a bit more information in this instance. We need to see this structure low being broken for us to take sells, and we need this structure high to be broken for us to take more buys, right? So let's move on with it. As you can see in this here, what, let's say price pushed then to the upside. Oh man, I switched this off again. TradingView is a bit harder to use, but I like the fact that the tools are much clearer. So looking at this, let's stop at that point and let's talk about it again. In this instance here, what do we notice? We notice that, hey, okay, this high has now been broken to the upside by that high, right? This low is a higher low as compared to that low. Now, in this instance here, this could be a tradable opportunity, right? This could be a tradable opportunity. Why? Because we've had a market structure break to the upside. We've got price failing to break back below this low, and we've got another market structure break to the upside again, right? So looking in this instance here, what will we now do? We now essentially need to define our range that we're looking to trade inside of. So in this instance, what are we looking at? This high, or we can call it that high or this high, whichever one you want to take. Both of these highs are fine, right? And the low that was formed that created that new high, right? That's the low right in there. And then as price obviously begins to draw down into this area here, this is where you would be looking to find an entry somewhere inside of here, whether it's at that point, whether it's down here, whether it's inside there, that doesn't necessarily matter. Right? So my point in this teaching, or in the scope of this lesson, was simply for me to make you understand that market structure will assist you in targeting, because if you jumped in here, you would be targeting here as your first take profit. Right? If you jumped in here, you would be targeting here as your first take profit. You know that if price breaks this previous high, right, then this would essentially be your SL. You know that that's your SL. In this instance, if price breaks this previous low, this would be your SL, right? Entry, entry. So once you understand your range that you are within, once you understand where the market structure is, you can effectively enter and target whatever it is that you want to target and make sure that you're getting the highest probability in your trade. I hope this video was educational and I hope you were able to get some information from this. Remember, if you have any suggestions, anything that you are a bit confused about, drop it in the comments and I'll be sure to get back to you. I'll be sure to see if I can do a teaching on that and pass on some information if possible. Now, on the next video, we'll most likely speak a little bit more about a trend within a trend, right? Because it's important to understand, like, as price is pushing here to the upside, there is a trend inside of that. As price is pushing here to the downside, there is a trend that's forming inside of there too, the downside. And once you begin to see that as well, you're not necessarily going to be confused about, hey, this market, is it bullish? Is it bearish? You will then understand that in a bullish push, you can always have a trend inside. You can have break of market structures inside of it. But as long as price respects your range, you are okay, right? But let me not go into that now, because then I'll end up extending out this video, and it's not part of today's teaching. So that's it for today. As always, it has been a pleasure to share with you guys, and I am wishing you a blessed and a profitable trading day, trading week, trading month, and until next time, we will catch up.